Here we go. Good morning, good morning, good morning, and welcome to another episode of Money Matters. My name is Nev, and today, boy, we got to talk about what's going on because holy mackerel, are we having some amazing news. Number one, let me show you this because I think you're going to like it a lot. And what I'm showing you right now is a Bitcoin chart. And as you can see, it looks like we're going to be following this trend over here. And looks like we are having yet another beautiful triangle going in. Of course, there is a warning that potentially could go lower. But I think it's more likely than not that we're going to see new highs. So we're going to see a bit of a consolidation. And then things are going to pump on. And Ethereum is doing just about the same thing. So we're going to see some pretty interesting and exciting moves. We'll see how it's all going to play out. It's all matter of time of how things are going to roll out. But this is not the only news that we have for you today. Oh, no, no. We do have a bit more exciting stuff what's going on in the beautiful crypto world and the world of money. And it has to do with some of the new regulations that are coming in. Some of them are bad, some of them are good. Overall, I think it's going to be an amazing year for crypto, and I think the decade as a whole is going to be mind-blowing. So, of course, if you are here joining right now, good morning and welcome. Hey, do me a huge favor, smash the like button, subscribe if you're brand new, do hit notifications, and we'll be joining you every single day. We do this every morning at 7 a.m. right here, same bad time, same bad channel, same bad me coming your way. And if you're listening this to one of the podcasting devices, hey, welcome as well. Super excited that you are here. Can't wait to get this thing to you. All right, y'all, let's do this. All right. Well, happy Tuesday to you. Hopefully you are enjoying this beginning of the year. Boy, yesterday was an exciting day. We've seen some of the dumping action going on in the world of crypto. Of course, we've been expecting that to happen right around 34,000, which is what we got. It came back down and it's starting to consolidate, which is a beautiful thing and very, very needed. And so that's where we are right now on the stock market, which I actually think we should probably take a brief look at. Right over here, you can see that we've actually had some downside of the whole thing. And, this is kind of what happens, on the first day of the year. Boy, it was super volatile when we were talking about traditional markets with things kind of like gapping up, gapping down. You don't know what's going on. And of course, it was not a pretty trading day. Well, it might have been pretty for most people, but it was a very, very volatile day. Much more volatile than anything crypto can actually deliver, if you can believe it or not. All right, y'all. So let's go in and take a look at the markets, and then we're going to go in and start playing around with all kinds of cool things. So one of the things that I think it's important to take a look at is where we are. Well, right now, Bitcoin is sitting at $31,885.69. We're up 2.7% in 24-hour period. We're still up 17.3% in 7 days. So even the big old dump that we've seen, just yesterday, playing out over the last, I don't want to say 24 hours because 24 hours being up, let's say 48 hours, we are starting to kind of break through from it. Ethereum, holy mackerel, look at that puppy. $1,042.25. It pumped 7.4% in 24 hours and 42% in a week. Man, oh man, what a gain over there. But it's not the only pumper and a gainer. And we'll see, we'll take a look at what's been going on with all of the stuff. As we scroll down the top 100, you will see that there's more green than there is red, which means overall market is doing incredibly well over the last, 24 hours. And, the interesting piece about Ethereum, I have been sharing for a while now, for months, if you have been following the channel and listening to what I'm saying. I mean, even at the, beginning of the year when we were at $100, $200. I was like, Ethereum is ridiculously cheap. It might make sense to get into it. Then we hit the $300, $400, and I said, Ethereum is really cheap. You should get into it. Then we hit the 600, and I'm thinking we're still, less, more than 60% from the all-time high. This puppy is going to pump. Bitcoin leads the way, Ethereum follows, and that's what's been happening. I think we might be doing a little bit of a switcheroo where I think Ethereum might start doing some leading action and Bitcoin do some following. So we'll see how it's all going to play out. But overall, boy, oh boy, if you were getting, your Ethereum at 90 and at 300 and 400, I mean, you are up and uppity up. In the 24 hours, we have some massive gainers when it comes to the altcoins. So if you are something more than just stuck to one type of investment, aka Bitcoin, then you might be making some mad gains. Loopring is leading the pack 53.5% in 24-hour period. Synthetics is 29.9% up. Stellar 26.6. IOTA 25.3. Numeraire 24.7. OMG 23.7. Hedera Hashgraph 23. Aave 21.6, Elrond 20. I mean, you will see that there's a lot of ridiculously big gains. On the losing end of things, not a whole lot of losers, to be honest with you. The biggest one is Ampliford at negative 7.1, followed by Siacoin negative 5.3, Celsius negative 3.7, Sushi negative 3.2. I mean, Leo at 3.2 as well. Sorry, Sushi was 3.5. My apologies. And then we get into like less than 1%, which is basically flat. So that's kind of where we are overall. Really no losers whatsoever. On 7 days, Loopring again is the biggest bumper at 155% in 7 days. I mean, this thing, you can probably see it right here on your screen, is starting to turn into a parabola. Should you chase it? Probably not. Can it go higher? Probably. But when we see some of these big things kind of go on up, and I'm not trying to spread FUD over here. You do what you want to do, but typically when we see something go like this, it tends to come back down a little bit. So if you really like Loopring and you believe it as a project, perhaps waiting for this situation to come back down, have a little bit of a pullback, and then potentially go into it if that's something that you're excited in. Dogecoin up 110.9, almost 111%. Again, this is one of those, like, I don't know why people get into it, but it's there, and TikTok loves it. And so, hey, if you're bullish on TikTok and the kids pumping it, then, go for it, I guess. The cool part about the Dogecoin, though, that I do want to point out is I don't know that I would necessarily invest in it. For full transparency, I'm not speculating in it at all. But what I like about the whole thing is that we're seeing these 8-year-olds, 10-year-olds, 12-year-olds who have a little bit of money, and they're going onto these dexes and basically buying and trading. So I think that the new generation, right, the generation Z, Gen Zers that are coming, after millennials, and the younger ones are like on the younger end of the spectrum of the whole thing, are way more savvy with technology, right? I mean, they freaking were born with it. I'm fairly certain that, they came out with an Apple Watch when they came into this world. And the cool part is that they're learning already how to trade and how crypto all works and stuff, that by the time they get into the 20s and 30s, which is only about 10 years from now, right? 10 to 15, maybe 20 years, depending on their age right now, they are going to be fully fledged, ready for all of this stuff to roll out. And they're not the only ones, because probably the most exciting news that we have right now has to do with the regulations and guidelines. So what is going on and what is happening? Well, let me share the news with you, y'all. So there is a news that is coming in that just rolled out. I want to say late last night, early this morning, depending on kind of where you are in the world, and where the OCC is allowing for the banks to join public blockchain networks. Hello, can we say ETH is gonna go to the moon? Using stablecoins and public blockchains may provide more resilience than other payment networks due to the decentralized nature of these systems. And of course, this is a huge win for crypto and all of decentralized networks and all of the crypto holders, and especially stablecoins. Decentralized, permissionless, open source, and internet mediated software is literally becoming the foundation for not just the US financial system, but for the global economy. This is coming from Alaire, who is actually the CEO of a Circle, right? And they are the ones who have created the USDC, so the stablecoin. So they benefit a great deal from this thing and the adoption. Leading US dollar pegged stablecoins like USDC and Tether could soon be used as mainstream mediums for a variety of settlements and payments. And of course, he's very excited that the regulated financial institutions will now be able to run blockchain nodes and become validators. This is absolutely huge. So now, to celebrate this, I have a little bit of a music to get us into our next episode or our next news. So here we go. You ready? All right. And the race is afoot, y'all. And the race is afoot. I couldn't resist. I couldn't resist. So here we go. Who's gonna win? I don't know, but it is exciting. So I'm gonna leave the music on while we do take on, because I'm enjoying this. So stablecoins get green light from US banking regulators. The Office of the Controller of the Currency, OCC, has announced that it will be allowing US banks to use public blockchains and stablecoins as settlement infrastructures in the country's financial system. So what's going on? Well, the banks would be allowed to participate in what it terms dependent node verification networks, INVN. In other words, public blockchains. Acting controller of the currency, Brian Brooks, stated, quote, "Our letter removes any legal uncertainty about the authority of banks to connect." Let me lower this down just a little bit. To connect to blockchains as validator nodes and thereby transact stablecoin payments on behalf of customers who are increasingly demanding the speed, efficiency, interoperability, and low cost associated with these products. Wow, I think that the Treasury just basically gave thumbs up to the crypto and saying, you guys are like creating something amazing that we need to switch to. Hello and good morning. Welcome to the 21st century. So, stablecoins off the hook? Well, this announcement comes at time when stablecoins have come under increased scrutiny from U.S. regulators. A new Stable Act has been proposed, which, if passed, could spell big problems for issuers such as Tether. And of course, the bill would require stablecoin issuers to obtain a charter banking license and submit to audits by the Federal Reserve. We've been talking about that in the past. The President's Group is working group on financial markets recently articulated a strong framework for ushering in an era of stablecoin-based financial infrastructure. So we've been talking about this before we continue. I've been talking about this on this particular channel, saying, hey, there's a good chance that USDC might become the US CBDC. So this is opening a door exactly for this stuff. We'll see if Nev was right or Nev was grossly wrong, right? So I don't know. I don't have a crystal ball. So I'm taking wild predictions and reading the tea leaves and the coffee grounds, trying to figure out what's going on. The actual stablecoins to be permitted were not disclosed. Co-founder and CEO of Circle, Jeremy Allaire, called it a huge win for crypto and stablecoins. Quote, "The new interpretive letter establishes that banks can treat public chains as infrastructure similar to SWIFT, ACH, and Fedwire, and stablecoins like USDC as electronic store value. The significance of this can't be understated." This is absolutely huge, y'all. Absolutely huge. for all of the crypto, for all of the stable coins. And this is absolutely amazing for everything that has been built over the last 12 years when Bitcoin just rolled out. So what a gift for a 12th birthday to Bitcoin and Bitcoin hodlers and the entire network of cryptocurrency enthusiasts. And you might be one of them if you are watching this or listening to this channel. So, of course, we're seeing this stuff that is really cool. Now, one of the things that I think is also very important is that a lot of these projects are built, not everything, but a lot of the projects around stablecoins are built based on Ethereum, which is why I had stated that Ethereum has a huge, absolutely huge potential to, just blow things out of water and go to ridiculously bigger highs, bigger than anything we thought possible, bigger than, everybody's like, oh, is it going to hit $1,500? It's going to hit $1,500. It's not going to surprise me if it hits $15,000 or more. And actually, even at $150,000, I wouldn't be shocked when it came to that stuff, especially as things end up changing in how the whole thing is being mined, how the network is being protected. And I know right now everybody's talking about the gas fees and that's all expensive, but that's all going to shift. And it's going to shift in a big way in the near future. So now that we're talking about Ethereum, let's go in and take a look at the actual chart. Let me see if we can get you to see this a little bit better. So here we go. This is what Ethereum has done. Of course, if we zoom out, you will see that we've gone from this like 720, 750, maybe come up to like 60, come back down to 20. So that's mid 700s, low to mid 700s. We've been playing there since about 28th of December till about 2nd of January. Then we have exploded up. We've seen a little bit of this volatility thing that has transpired over the last few days. So we've gone up, we've reached the new temporary highs, not all-time highs, but temporary highs of about 1160 plus minus. And now we are actually entering consolidation period. Now you will see that there's this beautiful triangle being formed right over here, right? And it looks like we are following it because, in preparation for the show, of course, I drew these lines. And of course, we are seeing here we have another triangle as well. That is the descending triangle. And you can see that we're kind of flirting around with it. So we'll see how it all plays out. Is it going to come back down and play here? Or is it going to follow and bounce off of this purple line coming back in? So we'll see kind of what is going to happen. Overall, what I expect and I think is going to happen, again, I don't have a crystal ball, so don't pay attention to Nev, and don't trade based off of a random guy on YouTube doing stuff, or on whatever podcasting service. But what I think is going to happen is we might come back up here, kind of hit it, come back down, sort of do a little bit of consolidation, maybe even break it, kind of test, maybe even come back down here and test this 980, 970 level. And then what I think is going to happen as this consolidates, we'll see if this goes in down here, we might actually see a bit more of a channel kind of that is developing on the longer term. That is one of the possibilities. The other possibility is that we could actually see something like this where we go up, come back down, and then next thing we go in and reach new highs, probably this time around breaking the all-time high of that like 1400. So I think we could basically come as high as 1420, 1450, 1440, maybe even $1,500. And at that point, I do see a bit of a dump because many people have been hodling for a long time that have purchased at those levels back in 2017, 2018, and they might actually decide to go in and sell their coins. So that is one of the possibilities. Again, I don't know exactly how things are going to roll out. I don't have a crystal ball, but that is kind of what I think might happen. Overall, I do expect that Ethereum is going to come to ridiculously new highs, and I think even purchasing it at anywhere below $2,000 is going to be like a gift. So it's going to be super super cheap. So we'll see how that all plays out. Again, I don't have a crystal ball, but I do, looking at all of the stuff of what's going on, I do see ETH being an incredibly good and solid place to invest. At least that's my own personal. Again, not a financial advice. Do your own due diligence. Do your own research. And if you need a financial advisor, then by all means, find one. Find one. So here is what we have when it comes to some of the other important news. And you know that we've had a ruling that rolled out from FinCEN about the self-custody wallets and what the exchanges would have to do. And of course, they gave a deadline. I think it was like this morning was the deadline, or yesterday, something like that. And it was this crazy ruling when there are many people that have gone out there and argued with the FinCEN, proposing that this is ridiculous. So here is the newest and the latest and the greatest of the news of what's going on in this particular area. So Anderson Horowitz is joining the push against the FinCEN's 11th hour crypto rules. As you know, they rolled it out right before Christmas. So talk about the Grinch who stole Christmas. Anderson Horowitz, they're not the ones who stole Christmas, okay? It's Stephen Bucci, Department of Treasury. Anderson Horowitz, also known as A16Z or Z, as the latest crypto-related form to oppose the recently proposed regulations in the United States. A rushed, non-vetted rule under the cloak of the holidays that violates the government's own establishment rulemaking procedure is how they have actually rolled this out. And of course, it came out from Bucci, who was likely very upset that he's got to go. So he figured, well, if my milk is sour, I'm going to sour everybody else's milk. So we'll see how that is going to go. I don't think it's going to go anywhere, y'all. I mean, sure, it could potentially go in, but it's going to end up in courts. And you'll see why. Effectively, the new regulation, in case you're new to the whole thing, would require various cryptocurrency entities to collect and report detailed personally identifiable information of their customers' counterparties. This standard is applied to no other sector in the financial industry today, and the rule violates the Fourth Amendment of the U.S. Constitution by expanding the competencies of the Bank Secrecy Act. So that's one of the reasons that this is a problem. The other one is that they only gave 6 days to actually argue this whole thing, where it should be 60. It should be 60 days for something like this. So I don't think this is going to hold at all. But right now, it's just causing everybody to have to react and deal with it. And Brian Armstrong from Coinbase also said that Coinbase would be willing to take regulators to court. And I think that there are many other major firms that would be joining them, and if the legal action is necessary. The Twitter and Square CEO Jack Dorsey wrote a letter to FinCEN as well, in which he stated that the rule would not only be hamstring law enforcement capabilities. I'm thinking harming? I don't know. But also limit American innovation by hindering our ability to create a competitive service that allows customers to seamlessly transfer and transact in cryptocurrency the way the technology was designed. Now, an interesting piece to kind of note with this is that we do see Stephen Mnuchin. I can never say his name straight. Like, I always go with Bucci. And it would be kind of interesting if I ever worked there. I'd be like, hey, what's up, Bucci? And I'd probably get fired my first day on the job. So definitely not employable by Treasury right now. Not that I don't know that I would want to work in a government, but there goes that. Anyways, so the interesting piece is that you have self-custody wallets on one end, kind of trying to create this like really weird law that is basically, I think it was their design to sort of try to destroy of what's going on. And then on the other hand, you have the OCC, which is an arm of the treasury, go in and saying, hey, we want to use the stable coins and stuff. So I think they see the technology and the power of it. I think they see that there's a benefit. I think they see that they are not capable to create and build stuff. So they just use innovation from the entrepreneurs and basically adopt it and leverage it. What I think they're trying to do is get as much control as possible over the wallets, because they were like, well, you could do all these different things. Well, you could do all those different things with cash as well. When I withdraw my money, you can't track that $100 bills and what I bought with it. So we'll see how it's all going to play out. Overall, like I said, I don't think that the self-custody wallet stuff is going to go anywhere, because what they're asking is absolutely impossible. But again, we'll see. We'll see. I could be grossly wrong. One of the other pieces of information and news that I think is also might be important to you is that we did get a financial giant, De Beer, who sold half of his Bitcoin portfolio, and the CEO is saying why. So the CEO of British-based independent financial advisory company, the Veer Group, Nigel Green, is disclosing why he recently liquidated 50% of his Bitcoin. Now, before you jump in and say, oh, okay, Bitcoin is going down, I should be selling. No. There is a method to his madness, and I think the method is that we all can actually learn from it, not just when it comes to Bitcoin and Ethereum, but also when it comes to the altcoins, and that is taking the profit along the way. So this is what he said. Well, he sold half of his BTC late last month in order to capture some profits, with the expectation that he will buy back in later during the dips. It's not due to a lack of belief in Bitcoin or the concept of digital currencies. It's profit taking now to buy more later. Indeed, more than ever, I believe that the future of money is cryptocurrencies. Now, he did sell at almost 25,000. Of course, since then we've gained almost $10,000. In the just a few weeks. So that's something to also pay attention to. That I think it makes sense to kind of go in when you see massive pumps, to actually kind of go in and potentially sell and take some of the profits in. One of the things also to be cognizant is when it comes to Bitcoin, and let me see if I can change my screen again so that you can take a look into it. This is what we're looking at. We're looking at Bitcoin right now. Right now we're in a bull market, and so the challenge comes in with taking profits is that if you were to sell, say, on Christmas, right? On Christmas, we were at about 23, 24, 25,000, depends on when on Christmas, because it was a very exciting day. And say that right here, you see where, let me see if I can circle it, and then we'll zoom to it. Right here, you see that there was a bit of volatility happening. Oh, no. All right. Let me delete that. That is not what I wanted to do. Right here, we didn't see what was going on, right? And this is what you were looking at, right? And so you were like, oh my gosh, we just did a giant pump. Look at this. It looks almost like a bar chart. I should probably sell. Well, right now we're in a bull market, and then look what ended up happening. You're like, oh, this big old thing is nothing. Holy cap, holy, I should sell over here, right? So you catch yourself in a moment thinking maybe I should sell over here, which is at 26,000. But then what happened? We consolidated and we printed even more. And you were like, oh, crud. Then we did something insane right here on January 3rd, right? Happy birthday, Bitcoin, yet again. And we hit the all-time highs. Of course, we did have, this was a healthy dump right over here. So if you had potentially sold right here at the bottom, which is impossible to time, it's basically luck, right? It's basically luck. If you're able to time it and buy it here at 27, then you could have potentially kind of gained. So one of the parts that is a bit more challenging with Bitcoin to do some of these things in the highly bullish markets of where we are right now is to try to see if you can time it, because again, had you purchased it over here, obviously 27,000 purchase is much better than 34,000 purchase, just because you get more Bitcoin for the same amount of dollars. The challenge comes in is that if you're not able to do it, and you sell your 28,000 Bitcoin at, 20, 30,000, but then you have to purchase it at 32. Well, you just lost money. So something to kind of pay attention to. You have to understand also the larger cyclical components of where we are right now and in the market. So where are we in the market right now? Just to kind of understand of what's going on. It's just the beginning of the whole year. If you watched yesterday's episode, then you clearly understand of where we are and what's been going on and what you can expect over the next 12-ish plus months, like plus minus, right? Nobody knows exactly how it's going to turn out. And I am one of those who also doesn't know exactly how things are going to turn out. The exciting piece right here is that we did see a dump yesterday, right? We did come back down. We're looking at the 15-minute chart over here, just in case you're wondering what we're looking at. And we can see that we're seeing this beautiful triangle formation yet again come to fruition. So if we come into it, we should expect something like this, where we come in, we might actually hit this, we might not, come back down, and then we should be off to the races, likely beating this $35,000 level. And if that is to happen, well, then we could actually, in relatively short term and short period, easily go into the 40 to 45, even $50,000 in the first quarter of 2021. So again, I don't know exactly how it's going to play out. My crystal ball broke eons ago, but that is something for you to make a decision of what makes or doesn't make sense and how you want to play in the market. In the final piece of the news, we do have some news from Russia. And no, it has nothing to do with hacking. It does have to do with Bitcoin mining. And they are actually starting to do it basically for free. And not that long ago, I've actually listened quite a few different individuals talk about this stuff. I think I've heard it from Max Kaiser, I think, talked about it. Ivan on Tech talked about it. I'm trying to think. I want to say Raul Paul might have talked about it. So there are some of the other individuals that talked about it probably 6-7 months ago. So it's been a while since this conversation was started, but now we're actually seeing the evidence. So what I'm saying is they were right, and what I'm also saying is, hey, you should maybe look at listening and watching those folks. And by the way, they're not paying me to say that. I'm just saying they have good information. So 2/3 of Bitcoin production and mining is happening in China. And of course, if you didn't know this and you're watching Chico Crypto, so there you go, yet another shout out for a good channel. He actually did the full episode on the mining and how many mining pools are actually coming from China. So China is number one. 2/3 come from China. In the second position is US, which represents only 7%. And then it's followed by Russia and Kazakhstan, of all places. But the ranking could soon change, and Russia could easily take over in the second position and possibly start moving into the first position. We'll see how it works. And here's the reason why. Because they are starting to make a power play to ramp up its mining operations in a venture led by Gazpromnet. So the Gazpromnet is actually a subsidiary of Russia's state-owned Gazprom, which is the natural gas giant. It's the 10th biggest producer of oil, right? So they are huge. They're huge in the world. And I think once they figure it out, guess who else is going to join? Well, OPEC, right? Because here's what they're doing. It's actually quite brilliant. China gets a relatively speaking cheap energy, cheap electricity, which is what you need to mine Bitcoin, because they're burning coal, coal. Sorry, not coal. And so that's not the cleanest necessarily thing, but that's kind of what they got. A lot of them are using hydropower as well, so that's why they'll actually end up moving with the season. But Russia is doing something interesting. They began a cryptocurrency mining operation in one of its Siberian oil drilling sites, unlocking the power of Russia's oil and giant resources for the needs of Bitcoin mining. Russia's new mining operation will be powered by natural gas from the oil field. So what ends up happening is when they're going out there and getting this oil, they actually have to burn off this extra CO. And of course, that they have to pay fees and, all this stuff that ends up happening and pollutes and everything else. Well, they have figured out that there is a way to utilize it instead of wasting it and actually make money as opposed to pay money to use it. And what they're going to do, well, they're going to use this to generate electricity, and that generated electricity is going to be used to mine Bitcoin. So here is that interesting piece. Now, we've seen some of this stuff actually happen in Texas. For example, we've seen some of the miners kind of go in and request for permissions to build in these mining farms. In Texas is one of the places where they're doing that because of all of the oil fields and all of the stuff, fracking and everything else. And I think more and more of that is going to start happening throughout different states and even countries. What makes this very interesting is that this is state owned. So if the state is actually going to subsidize something and they're going to take it, they're likely going to start potentially adopting Bitcoin into their reserves. Again, I don't have a mole in Russian government. I don't know anybody in Russian government. I am just sort of thinking of kind of the next steps. So as this puppy, aka Bitcoin, keeps on rallying up, and it will move pretty darn quickly over the next 10, 12, maybe 18 months if the cycle is that long this time around. And I think, they're going to try to see if they can adopt it into their reserves. And this is going to become a very interesting move because as Russia starts taking over that, well, guess what? The U.S. is going to want to compete, as will Brazil, as will China, as will India, as will Europe. And as I have said, the game is afoot. The game is afoot. The location of the new Russian Bitcoin farm also means that the cost of the operation will be relatively low. Instead of paying a premium to use energy from the grid, locating the cryptocurrency mining on site at an oil field means that a steady supply of natural gas is virtually free. And of course, because they have super cold temperatures, this gives them an opportunity to basically keep the rigs pretty darn cold. So, shall I play it again? I think so. Here we go. I'm telling you, the game is afoot. So there you go. Thanks for watching. Thanks for listening. Until next time, stay forever money blessed. And to remember, you are only one.